All right, let's get into it. Today, we are tackling a really fascinating puzzle in the stock market. We're going to break down a pretty dense technical report on a company called Upstream Bio. Its ticker is UPB. And here's the thing. It's a story of a stock that is absolutely flying, but at the same time, it's flashing some serious warning signs. So how can both of those things be true? Well, let's dive in and figure it out.
And when I say flying, I'm not kidding. This number, that was the stock's return in just 1 day, according to the report we're looking at. A jump of over 5%, that's the kind of move that makes everyone, from pro traders to someone just glancing at their phone, stop and ask, whoa, what is going on here?
And to answer that question, we're going right to the source material. This is the analyst report we're going to be decoding together today. Now, our mission is pretty simple. We're going to translate all of this financial jargon into a clear story with some really straightforward visuals to guide us.
Okay, first things first. Before we can even begin to understand the why behind this huge surge, we have to get a handle on the what. What are the basic numbers? What actually happened here?
So here's the snapshot as of October 29th. The stock is sitting at $24.84. But what's really interesting here is the context. See that last number? Just a handful of days earlier, on October 24th, it was down at $21.86. That is a heck of a climb in a very, very short amount of time. And that's really what this whole story is about. So what is fueling this incredible rally? Well, the report points to several classic bullish signals. Just think of them as green lights on a dashboard, all flashing at once, telling the market to go, go, go. So let's break down what these signals actually are and, more importantly, why they matter. We're going to start with a concept called moving averages. Now, it sounds super technical, but I promise it's actually pretty simple. All it is the stock's average price over a certain number of days. The only thing you need to remember is this. A stock that's trading way, way above its average is kind of like a runner who is miles ahead of their usual pace. It just shows exceptional strength right now. And wow, this chart just lays it all out there. Take a look at the current price, nearly $25. Now, look all the way to the left at the 200-day simple moving average, or SMA. It's way down at $12.29. The price has literally more than doubled its long-term average. And you can see, even compared to the really short-term 5-day average, it's still pulling away. This visual tells you everything you need to know about how powerful this momentum is.
And it's not just about the price itself. Other technical tools, like something called the MACD, they measure the momentum behind these price moves. A good way to think of it is like a speedometer for the stock. And for UPB, the report says the speedometer isn't just showing that it's going fast, it's showing that it is still accelerating. The engine is revving higher, not slowing down. And believe it or not, the good news just keeps piling up. Several other indicators are all pointing in the same direction. One tells us this trend is strong, that it's not just some random blip. Another one confirms the direction is firmly upward. We're also seeing huge trading volume, which means a ton of investors are piling in, and that just adds fuel to the fire. It's like a whole chorus of signals, all singing the exact same bullish song. I mean, it sure looks that way, doesn't it? With pretty much everything pointing straight up, you might think this is an open and shut case, a simple story of a stock on an unstoppable tear. But, it's never quite that simple. And here comes the twist. The very same report that lays out this incredibly powerful bullish case also raises some pretty big red flags. It looks like this rally might be running so hot that it's actually at risk of burning itself out. And this, right here, is where the picture gets a lot more interesting and a lot more complicated. So this is the heart of the matter, this central conflict. On one side, you've got this undeniable, powerful upward momentum. But on the other side, you have multiple signals that are all flashing overbought. Now, that's just analyst speak for too much, too fast. It's a sign that maybe the excitement is getting a little ahead of itself. The main indicator that tells us this is something called the Relative Strength Index, or RSI. The absolute easiest way to think about it is as a popularity meter for a stock. When a stock gets way too popular, way too quickly, the RSI goes up. And a reading over 70 is that classic warning sign that a stock might be due for a cool down. So where is UPB's RSI? 70.45. It has just tiptoed over that critical line in the sand. This is really the first major piece of evidence suggesting that, yeah, the trend is strong, but it's also stretched pretty thin, and that might make it vulnerable to a reversal. And the RSI is not alone here. A few other overheating gauges are also flashing red.
We don't need to get bogged down in all the names, but they're all basically telling a similar story. This stock is stretched. One of the most interesting ones is that the price is actually punched through its Bollinger Band. You can kind of think of that as a statistical rubber band. And when the price stretches it this far, it often has a tendency to snap back toward the average. So what we have is this fascinating tug of war, right? Powerful upward momentum on one side and some pretty clear signs of exhaustion on the other. Now, given these conflicting signals, the report doesn't just pick a side. Instead, it does something really helpful. It lays out 3 potential paths for the stock from here. Okay, here they are. First, the bullish case. The momentum is just too strong, it can't be stopped, and it blows right past the next ceiling at 25.45. Then there's the neutral case. The stock just takes a breather. It moves sideways for a bit around that 24.48 pivot point just to digest its recent gains. And finally, the bearish case. Those overbought signals win the day, a sell-off starts, and the price gets pushed back down to a support level around 23.86. So, after all of this evidence, the good, the bad, and the kind of murky, where does the report actually land? What's the final takeaway after weighing all these competing data points?
And here it is, straight from the source. This conclusion perfectly captures the dilemma we've been talking about. It says, yes, the trend is undeniably strong, but the warning signs of a potential correction are just as clear. And that's not a contradiction. It's just a reflection of a complex, dynamic situation.
And really, that's the headline here. If you remember just one thing from all of this, let it be this. The momentum is real, but so is the risk. You've got these 2 powerful forces in a very delicate balance, and the next big move is really going to depend on which one of them proves to be stronger.
And that brings us to the final, critical question that this whole deep dive on UPB leaves us with, and it's a question that applies to pretty much any kind of analysis. When the data is pulling you in 2 different directions at once, how do you possibly navigate the path forward? The data rarely gives you a simple, clean answer. The real skill is in understanding that tension and figuring out what comes next.